Are you ready to wipe the slate clean and jump into 2025 with your money organized and a clear path to reach your financial goals? Well, in this video, I'm going to share with you 8 actionable tips for how to declutter your finances and also to detox those bad money habits. So let's jump right into tip number 1, and that is to review the 3 B's, which is your budget, your bills, and your bank accounts. So starting with the budget, we're going to review how well you actually kept to your budget. Was it easy to follow, or did it feel restrictive? Did it feel good for you? What about your budget kept you excited this year, or what about it made you frustrated with it? Also, is there anything that we can add to the budget this year? Can we increase your eating out budget by $50, or can we add new priorities like a specific savings goal? Also, did you get a raise this year? I want you to update your budget to reflect that income change. And remember, this is your budget. I don't want it to be so restrictive that you end up hating it, because ultimately you will not stick to it. So I want it to feel good. I want it to feel exciting to use. And remember, a budget is something to help you get somewhere rather than holding you back from something. Next, we're going to look at your bills. So I want you to just review all of the expenses that you have and see, are you overpaying for any of these bills, or do these bills look correct to you? Also, is there anything that we can cut from your expenses, or are there things that have come up that we need to add to your budget? So I did a video, I think it was called How I Save Money on a Tight Budget, and I gave you some actionable steps for how to negotiate getting your bills lowered. So if you are interested in that, I'll tag it here in the cards. But I want you to see if there's any bills that you can negotiate lowering the price. So if you have a cell phone bill that you're paying, you know that you're overpaying for, then look for cheaper options. Like my husband and I use Visible, and that uses the Verizon tower, so we still have great cell service, but we only pay $25 a month. So we've saved a ton of money just by doing that. You can do the exact same thing with your internet, or if you have natural gas at your home, you can negotiate the price per therm and just different things like that. So I want you to just review your bills and make sure that they're accurate, make sure that you're getting the best deal. And we're also going to look at your bank accounts. So I want to make sure that you're not getting charged any fees that you shouldn't be paying, or are you getting the best interest rate or perks with the bank accounts that you do have, or should you switch to a different one? So a quick story, my mom told me that she was paying $25 a month for her just checking account, and she banks at a very large bank. I won't say what it is, but she banks at a very large bank. And I was like, why are you paying $25 a month just to have a checking account? And she thought that that was normal, and I was like, absolutely not. That's not normal. You should not be paying any fee in order to have a checking account, because that should be free. And so I looked into it, and turns out that when she moved some money around, I think a year or so ago, the bank teller offered her this other checking account that supposedly, they earn interest on that checking account. So because it's a checking account that earns interest, they add this $25 fee to it. But the crazy thing is, she wasn't making enough interest to even cover that $25 fee per month. And I was like, this is absolutely wrong. So I looked up the bank account that she needs to have that had no fees, and we got her switched over to that so that she doesn't have to pay that $25 anymore. But that's what I want you to be looking at when I'm talking about these bank accounts. Make sure that you're not being charged a fee. You should not be paying to have a checking account, or a savings account for that matter. All of these accounts are free, and if your bank doesn't offer one for free, you need to be moving to a different bank. And so not only with checking accounts, but let's look at your savings accounts as well. My husband and I have a high yield savings account, and if you don't know what that is, it's a savings account that actually earns interest, and a good bit more interest than a traditional savings account. So we have our money with Ally Bank, and actually a few months ago I also opened up a high yield savings account with Wealthfront Bank, and that had a little bit higher interest than Ally even did, and I've really enjoyed using both. The one thing that I enjoy about Ally Ally is that you have, all of your money in the account, but then you can separate the money into buckets. They call it buckets. So if, say, you have $20,000 total balance, and then 5,000 of that is your car fund, and then 4,000 of that is your, emergency fund, or whatever it might be, you can categorize all of that money into buckets so you can just see things clearly, and that's where we have all of our sinking funds. So I think that that's a great benefit that Ally offers, and I don't know if any other, maybe Capital One 360 offers that as well, but I love that feature on Ally. So I want you to take a look at your checking account, make sure you're not getting charged any fees. Take a look at your savings accounts and seeing, are you getting the best interest rate? And they do change as the Federal Reserve cuts interest rates. It doesn't stay the same, but if you're only making 1% on your money, you can absolutely do better than that in today's interest rate environment. So I want you to take a look at all those things. Make sure you're getting the best bang for your buck. Number 2, review your credit report. Did you know that every year you can get a free credit report? All you have to do is go to annualcreditreport.com and you can actually pull up your credit report with all 3 bureaus, which is Equifax, Experian, and TransUnion, I believe. Okay, so I quickly wanted to walk you through the annualcreditreport.com website so you could see how to actually use it to get your free credit report. So you see that I'm just at annualcreditreport.com, and you can click here and it just says request your free credit report. So we're going to click there. And you do have to fill out a form, and you can pick the reports that you want. So like I said, there are 3 credit bureaus, Equifax, Experian, and TransUnion. And so you fill out a form once and you can get all 3 reports. And so once you do that and you get your reports, what you need to look for, and it has a tab right here, when you're reviewing your credit report, you need to make sure that your name is correct on the credit reports, and because basically what you're going to see is all of your outstanding debts. You're going to see if you have credit cards, if you have personal loans, if you have student loans. You're going to see all of those debts named on the credit report, and you're going to see the outstanding balances as well. And so you want to make sure that your name is correct. You want to make sure your address that you see on your credit report is correct, and the loans that you have along with the balances that you have on the credit report. You want to make sure that those are accurate. And if they're not accurate, if there's anything on your credit report that looks fishy, if there is a name, of a creditor on your credit report that you have never seen before, then you definitely need to file a dispute or report inaccuracies. And this website walks you through how to do each of those things. But that's why we want to do this at least once a year. Pull your credit report so that you know exactly what is attributed to your name, because what's on your credit report, you are legally bound to, pay. And so you don't want to be, required to pay something that you didn't even do. And a lot of times, people get scammed and loans or different types of credit are taken out on someone's name and they had no idea. So looking at your credit report at least once a year is a great way to just protect yourself from, somebody taking credit out in your name. And it doesn't just have to be, a random scammer from the internet. It could be your family members that know your social security card and are taking out debt or opening up lines of credit in your name. So you want to every year take a look at your credit report and make sure everything is accurate. And another thing that I want you to do is freeze your credit. So you have to do this with every credit bureau, the 3 credit bureaus, and you can basically put a freeze on your credit, which means that no one can access credit in your name. Nobody can take out a new loan or open a new line of credit in your name, not even you when it's frozen. And so you go to, this is Experian. You set up a free account and basically you put the freeze. And this just basically protects you from like I said, a scammer or a shady family member from opening up lines of credit in your name without your knowledge. So the only way that you can open up new credit lines is you have to physically come in and thaw your credit. So if you know that you're going to be buying a house soon or buying a car, then you can go ahead and unfreeze your credit so that you can make those purchases. But if you know that you don't have, a need to open up a new line of credit anytime soon, you just need to keep your credit frozen at all times just to protect yourself. So I would definitely do your credit report once a year, and I would go to each credit bureau's website and freeze your credit. Number 3, we're going to audit your subscriptions. So that can be your entertainment subscriptions and streaming services like Netflix, Hulu, Apple TV, things like that. I want you to go through those and see, are those necessary? Like, really, if you only watch one show per streaming platform, you need to make some decisions. Like, I totally get it because I had Peacock because I love watching King of Queens, and I think that's the only place that it streams that I had. And my annual membership was coming due, the payment, and I was like, maybe I should keep Peacock because I love watching King of Queens. And I was like, that just makes no sense to keep paying every single month just to watch one TV show occasionally. And, see, we can rationalize in our head, these things that don't make a lot of sense financially. So I want you to go through your subscriptions and see, are you actually using these things? Because if you can free up some cash, even just $20 a month, you can be saving that or investing that. Every little bit helps. So I want you to, not just entertainment subscriptions, but if you have any business related subscriptions, take a look at those. See how much use you're getting out of them. Are they actually helping you make money by having those subscriptions? Or do you just feel like you're productive because you can say you have all of these subscriptions? Oh yes, I have, Calendly, and I have the pro version, or I have the pro version of this. Sometimes we just feel good about ourselves because we have access to these expensive resources, even though they're not really doing what they're supposed to do, which is make us money, as if you have a business. So I want you to look at all these subscriptions and make sure that they are useful and that they're making you money or helping you save some money. And if not, they gotta go. So to continue decluttering our finances, we're going to go to number 4, which is adopt the rule of replacement. So basically what that means is for every non-essential item that you buy, you have to get rid of something that you don't use. So if you saw your favorite influencer on TikTok using this amazing juicer and you got inspired because you want to start living a healthier lifestyle in 2025, I get you, I feel you, do your thing. Then you're going to have to get rid of that, blender that you bought in January 2024 because you was about to start a healthier lifestyle. If you get that juicer, get rid of that blender. What the rule of replacement does is it keeps unnecessary spending and clutter in check. So it doesn't allow you to continue to just build up items in your house and create clutter, but also just spending frivolously without much thought. So before you buy something, go ahead and look around and see what you're going to get rid of. Before we go to number 5, if you have been getting value from this video so far, please let me know. Give me a thumbs up if you would like to. That lets YouTube know that I'm doing a good job. And also comment down below if your credit is frozen or not. Number 5, plan for expected expenses. So basically what I want you to do is identify any upcoming expenses, such as a birthday party or a vacation or car maintenance or house maintenance. And I want you to start setting aside money now so that you can avoid using debt later. And basically what this is called is a sinking fund. And a sinking fund is basically saving for expected expenses. So it's different from an emergency fund because an emergency fund is saving for an unexpected expense. But a sinking fund is for things that are coming up. Your baby's birthday comes on the exact same day every year. Your anniversary happens on the exact same day every year. Christmas happens the exact same day every year. These things can cause big expenses, and if we're not ready for them, we will either overspend our budget or we'll put it on a credit card, which will increase our debt. So we want to start preparing now for those purchases. So let's just say you need to buy new tires this year, and you know it's going to cost you about $800 to get all new tires, and you want to be able to do that within 6 months. So basically what you're going to do is divide 800 by 6, and that's going to give you $133. So you're going to want to save $133 every single month into your sinking fund so that within 6 months you're going to have that $800 set aside, and then you can go and purchase your tires in cash and not have to worry about it. And I feel like having sinking funds just brings so much peace of mind because you've already prepared for this expense. So when it comes up, it's not catching you off guard. You're not having to go, run around finding who you can borrow the money from or put it on a credit card, or even worse, pull out of your emergency fund, which leads perfectly into tip number 6, replenish your emergency fund. So if you didn't have a sinking fund and you had to dip into your emergency fund this year, then it is critical that you replenish your emergency fund. Your emergency fund is your safety net in order to keep you from a financial setback in the event of an unexpected expense. And so you have to be so diligent to only use it for emergencies. Now, what is an emergency? Well, it is something that is completely unexpected. It is completely necessary, and it is time sensitive. So a perfect example is a death in the family, because that would be completely unexpected, also is completely necessary because you have to be there, and also is time sensitive. You can't, go to the funeral in 3 months. So that would be considered an emergency. Your child's birthday party or your sister's wedding are not emergencies. So if you had to use your emergency fund this year, then I want you to thank God that you had the money and now go replenish it. If you didn't need to use your emergency fund this year, again, thank God. And now I want you to review your emergency fund. So do you have enough? Are you at your 3 to 6 months goal? Do you need less than that? Do you need more than that? Are you planning to move later on in the year where you need to beef up your emergency fund? Are you expecting where you know that you're going to be, once you deliver, you're going to be out of work for a little bit and you want to beef up that emergency fund? So I want you to start thinking, through the year and see what's coming up and that you can prepare for now and get that emergency fund beefed up. Also, make sure that your emergency fund is making you the biggest bang for your buck. So I recommend keeping it in a high yield savings account where it can earn more interest. A key element of a financial detox is to change the way that you think. And the best way to do that is to get new information, which leads us into tip number 7, refresh your financial knowledge. So what I want you to do is pick a new podcast, a new book, and a new YouTube channel in order to increase your financial literacy and to get fresh ideas for how to reach your financial goals. My favorite personal finance book is The Psychology of Money by Morgan Housel. It is probably one of the best books written on finances other than The Millionaire Next Door. The Psychology of Money explains that human behavior, emotions, and mindset shape our financial decisions way more than our financial knowledge or intelligence. So I highly, highly recommend this book. If you need a podcast recommendation, I highly recommend Afford Anything by Paula Pant. She's outstanding. And if you are interested in retiring early or learning more about investing, I would definitely check her out. As far as a YouTube channel recommendation, I have to recommend my own channel, The Choice Life, because on this channel we talk about how to use money as a tool in order to live your choice life, whatever that might be. And we cannot make better financial decisions until we understand how money works. So that's what we love to talk about on this channel. But as far as another YouTube channel recommendation, I love Minority Mindset with Jasprit Singh, I believe is how you pronounce his name. He talks a ton about the economy and how to invest, and I've learned so much from him. Now that you've increased your financial knowledge, I want to start working on the greatest money tool that you have, which is your mind. So in tip number 8, we're going to audit our financial mindset. So what is a money mindset? Well, basically, it's your unique set of beliefs around money and how you perceive and handle your finances. Your money mindset determines how you earn, spend, save, or invest your money. It's such a powerful tool. So you can have a scarcity mindset where you feel like there's never enough, or you can have an abundance mindset where you feel like there's more where that came from. As we audit your money mindsets, I want you to ask yourself, is it hurting or is it helping you? And I want you to start the new year off with a growth mindset, an abundance mindset. And detoxing from a negative or scarcity mindset is so crucial for building wealth because your mindset determines your actions. If you have a scarcity mindset, that causes self-sabotage, which leads to financial mistakes which cause you to stay broke. But if you have an abundance mindset, that allows you to build the habits that lead to more abundance. And that is exactly what I talk about in this video, where I go over the 5 effortless habits that are making me rich. And I hope to see you in that video. Thank you for watching. Please give this video a thumbs up and comment down below. I would love to hear from you. Bye for now.